Good evening. Today is March the 15th. It's in the evening time. It's Friday. Market is closed, but I wanted to take a look at something. I wasn't going to do a video. I want to take a look at something. I'm here, so I figured I might as well get one done. I think I'm going to do one Sunday again that looks at more of the long term. I want to look at the CFTC data and some longer term breadth and start marking up my charts after the open Sunday. So I might do another video that goes over more of the higher time frame stuff. But looking at today, when I wrote up my Substack this morning, it's one of the things that bothers me about Substack. I like having it in writing because I can go back and reference days in the past. I can reference previous OPEX days, CPI days, whatever I want, right? But part of the problem with that is that I try to get it done as early as I can. And then I generally go do some other things and I come back before the open and I'll update based on where we're at, but I don't update my Substack. So this morning when I wrote this, we were trading pretty much unchanged for the day. Not much had happened in the overnight at all. So I wrote, I'm not seeing much value setting up early in today's session. We're in the middle of a 5-day balance with decent probability that we will have an inside day. And that's the way I look at things whenever we have an unchanged open in a very small range, low volume. I'll expect the market to stay in balance unless there are clear indications from market generated information that we are likely to break out of balance. So if I wrote this after we had this move down, I would have had a different plan, but that's how it goes. So that would have given me some information that we maybe are likely to break out of balance because we've been one time framing down. And we get a large move down towards the lows, the previous day's lows in the overnight. That's a pretty good signal. Then volume showing that we are accepting out of balance. So I'd want to see volume build showing that prices are being accepted down there, that we might continue that move down. I'll be watching overnight highs and lows, previous day's highs and lows, and Tuesday's highs and lows, which are Tuesday's this range day that we've been trading inside of the previous 2 days. So with that information, also knowing that it's Friday and it's OPEX, I think there was something else that I was paying attention to. Don't remember what that is now. But look at what we did. So we had that big move down in the overnight, and that put us opening at a gap. This is today's session. This is the previous RTH session. I'm not showing the overnight session in here. So we opened up with a small gap. And because of this strong move down here, I was looking for the opening range break up. I wasn't interested in taking one down. So I took the opening range break up just because we were so short on inventory, and that's a trade setup I've been working on for a while that works out pretty good when you have overnight position in a certain way, especially when that's fresh. If this move had happened in the Asian session and we've been trading where we opened for the previous 3 hours, and I wouldn't have been as interested in that trade. But anyhow, so we gap down, filled the gap. And then in B period, let me go ahead and open these up. What did I just do? How did I just delete my balance? There we go. Not thinking straight tonight. So we opened up, we filled the gap, ran out of steam. It's our 1 sigma level. I had this on a chart. We were trading above this before the open, but it does give an indication of if the market might stay out of balance or not, if we cannot get back into the 1 sigma range. So B period, we extended lows down, and then C period, we extended up, took the IB high. But we could not hold the IB high. We quickly fell back beneath. We one time frame down. We one time frame down again with a poor low. And then we broke that poor low and made new lows, took the IB low. So I was gone at this point. I left in B session before we even took either IB. I was just done for the day and done for the week. And that's the advantage of being a trader, is you can leave for the day and live your life. It was pretty nice. And I'm glad I did looking at this. There were a couple setups, but I don't need to catch them all. So we clearly built value lower on the day. we did have a gap down. We took the IB low. We did take the IB high. We couldn't hold either of those. So these are all just racking up stats, right, to get an idea of what this day has done. If you look at the things that we could not do, we could not get the previous week's low. So we could not go into balance on the weekly. Really far away from that previous week low. And we could not really get prices accepted below our 3-day balance. You see, we tried multiple times. You can see the volume taper here, and we ended up closing back up into our balance area. So if we look at this from an auction market theory standpoint or market profile, did we do a good job? And I think we did a decent job. We did move value lower. We one time frame down. And this is lower value. This is not overlapping to lower. So we did a decent job. We couldn't really accept below balance, couldn't one time frame down on the weekly. So, definitely a bearish result, bearish day. I'm not exactly sold that we're going to one time frame down Monday, especially being that today was OPEX day. So another neutral day. We've had a lot of those this year. It's pretty insane. The levels that I'm going to be watching coming into Monday, assuming that we open anywhere near where we closed, is this pullback in the afternoon, this pullback high. You can see it's also a poor high. So this will be an area that I'm watching. And we almost have a poor low. At least there's only 3 ticks of excess at the lows today. And whether that was, because the market was just pretty short, what the catalyst is for that, I don't know. But those are the 2 areas I'm going to be watching. So I'm going to take that off. My reversion level, we did have a good trade off of that level on A period. Our 1 sigma level will obviously be different. So just to visualize this, these are the 2 levels that I'm going to be watching Monday. For strength above here, or if we can one time frame down Monday, look for us to build down here, get some acceptance down here in this area. And as far as our breadth numbers, the NYSE was 1524 advancers by 1200 decliners, so a little bit of edge to the advancers. NQ is the same, 2200 by 2000, a little bit of edge to the advancers. Volume on ES was 1.4, so quite healthy considering our recent average volume. Range was only 34 points. Rotational factor was just -1. Had a lot of just a rotational day, a balanced day. And then our delta was -16,000. So we can see looking at this is the intraday delta, and we can see large lots, very large lots bought the lows, but overall net selling from the larger participants into the close of the day. And then when we look at the cumulative delta over the past month, then it's just been strong divergence. We have a pretty decent uptrend here, but we have a decent downtrend here. So just seeing a lot of divergence in delta right now. As far as next week, we don't have a whole lot as far as earnings. We have PDD, MU, Micron. Those are both Wednesday. Thursday we have Nike and Lulu and Carnival in the evening. But for releases, we have the FOMC minutes and press release on Wednesday. Then we also have Thursday, we have jobless, manufacturing surveys, several of them, PMI, existing home sales on Thursday. And then we have the 20-year auction next week too. So we have some stuff to look forward as far as that goes. We have our levels. We're still on the higher time frame. This is our weekly chart. And then this is our high time frame bar chart here. It's just a very strong uptrend. And just one time framing up on the monthly. The weekly is an inside week. But we did not one time frame down. We did not go into balance on the weekly. So we're strong on both of those time frames. Strong to neutral. strong to balanced, I should say. Strong on a monthly, balanced on a weekly. And on the daily, of course, we're in balance. And these are the weekly profiles. Each bar is 1 day. And I think this puts it in perspective pretty well that, it's just an inside week. This week was inside this week. And we see our value is pretty much in the center of this range. And we can see on our volume profile too, it's a very nice bell-shaped curve. So, this is the time as traders when we need to be careful. And some of our setups are not going to work as well. Maybe some of our setups are going to work better, like mean reversion type strategies. If you look at a day like today, if you just fade the edges, if you just do fade the edges, you can do pretty well. This day was very similar, just fading value. Yeah, you're going to get stuck every once in a while, but if you've got good stops in place and good entries, you can more than make up for that. Playing those ranges. So that kind of stuff does work. Playing the breaks on the IBs are not working as well, obviously. So, we need to pay attention to what is volume doing. Volume shows acceptance of price. And if we're not getting acceptance of price below these IBs, then it's a better play to fade them, especially when we have something else to lean on, like we do here. So if we look at this, look at my letter chart, so it makes it a little more obvious. But we have the IB right here. We broke the IB on G period. But then on H period, we come within a few ticks of the low of G period. And if we have reasons to believe that today is a fade day, like a flat VWAP, for example, then in my opinion, this is a good trade. You can get in a pretty good entry with a pretty good stop. And if it's a balanced day, then you're looking for the top of value. There's a couple speed bumps on the way wherever your POC is at. And you can see like today, we had 11 wide POC. So it gives you a good idea that we should revisit this area. We have the IB as a target, get back to the low of the IB, get to POC, VPOC, and then look for the top of value. So, there's several setups there. There's a short setup in L period, a long setup in H period. F is the same way. Even G and H, you can get in with only risking a few points, looking for it to get back into the range. And if you look at the high A period, we had C and D period, even E period. So plenty of opportunities there. If you're not trying to get involved in this middle area, that's where you're going to get chopped to death. Out here, you got a pretty good indication if you're right or wrong pretty quick. And you can get in with a pretty good stop loss. On F period, for example, if you had taken this long, then you have G period. If you'd taken this long, maybe you did get stopped out. If you didn't have anywhere to put a stop down here, then, maybe you would have taken a stop or gotten out, not knowing that price is going to eventually reject this area and come back into the range. H period, though, you have a much better place to lean on. It's very hard for me to take this multiple times. This is not an exact level here. We're getting into these areas and finding buyers. The sell auction is over, whatever. It's not like we just keep testing an area and have a poor low or high that we're expecting to fail after the third, fourth, fifth time. It's just giving me a good area to kind of target to get back into the range or target a fail. If you wanted to target G for a short, for example, below the IB, well, again, you have a pretty good idea of where to get out of this trade. So that's what we need to look at on days like today. Yesterday was the same way. Thursday was the same way that, we were trading inside of a previous range. We opened up inside of a previous range and we did make new lows, but we were still trading inside of Tuesday's range. So it's a lower probability, in my opinion, when you have an open like that. If you were to balance around that open, to be looking for breakout trades, unless you get entries on the other side of that. Like if you had been good enough to catch this this look above and fail on C period, then if I can hold down to the low, to the IB low, then it makes sense to wait to see if we can get a breakout. You have a couple opportunities to decide. I don't think it's going to work. But anyway, that's just a little bit of my thoughts on that. That when we're in balance, and what. Not all setups are going to work all the time, but this type of stuff helps you understand when some setups may work and when they may work better, and when other setups may not work as well, depending on what the market is doing. Whenever you're breaking out of balance, then it's a different story. But anyway, I don't want to ramble on that forever, but just something that helps me a lot. And, that's the reason, one of the main things that I get out of market profiles, being able to really tell when I should be looking for those days where trades can really move for you. When you start putting in big excess, you're one time framing up or down, you're putting singles in a profile like Tuesday, or putting in multiple singles. Those are the kind of days that I'm looking to trade away from the value, as opposed to days like today, where it makes more sense to me to either be short because all the stats are lining up short, or if you are going to be long, to make sure that you're long below value and that you're trading back into it, as opposed to trying to trade away from it. That's it. I hope y'all have a good weekend. Like I said, I'm gonna consider doing a video Sunday as I look over my longer term stuff, my breadth charts and my CFTC and everything. If not, then I will see you on Monday morning.